On YouTube, back with another weekly outlook. This week looks pretty simple week if we look at our economic calendar. But before we go into this week, I just want to do a brief recap of what happened last week. So let me pull up the economic calendar and let's go back to last week. Last week wasn't too crazy. We did have we had a lot of economic data. Didn't move the market too much, and we are going to talk about that and give more of a macro outlook perspective on that data. It really didn't change our thesis, our long term, or I don't want to even say long term thesis, but midterm thesis on the macro. So let's hop into it. So last week, one of the biggest talks we had were the CPI that came out for the U.S. So inflation everything pretty much came in line with the market forecast. So there was really no big move, right? The dollar just consolidated between 100 and right around 99.50. The CPI, like I said, it was in line. We had a little bit of relief on yields, so it took some steam off of like the dollar recovery. But other than that, nothing too crazy. And then we had PP. Well, let's look at this core inflation data first. So the first thing I want you guys to realize is that the July energy shock that we see takes about a month or two to show up in the CPI report. And that's something that you really can't miss. So with this data coming in line, it definitely shows us that inflation is back to normal. At least we're back at a base place. The core inflation month over month came in at 0.2%. The previous data came in at 0%, but that was like overly stated to the downside. So it looks normal now, but with the energy shock in July and energy prices picking back up in August, we may see 2 months back to back of higher inflation going into September, because data lags. So data that comes out in the current month is coming from the previous month. So just always keep that in mind. And when you have that energy leakage, that's going to start to show up in that data in September. And the crazy part about that is that that's the month that the Feds actually have their meeting. So we get the minutes this week, and we will see kind of like where they're at. But remember, the minutes comes from the last Fed meeting. So the CPI report that just came out isn't going to show up in their minutes meeting, if that makes sense. But we did see a sign of inflation picking up, especially in the retail sales. So before I get to retail sales, I don't want to skip over PPI. PPI also came in lower than expected, but it increased, and a lot of traders missed that. On Forex Factory, their color is red, our color is green, because it increased from the previous month. So we did see some PPI pick up, just not as fast as the market expected. But hey, keep your eye on that. And then we also had two Feds. They spoke last week. Hammock, if you're in my VIP on Discord, in my daily live trading videos, I talked about that narrative of how she is very hawkish. She's expecting multiple rate cuts to slow down inflation. And Barkins, like I said, very kind of leaning on like 50-50. Therefore a rate cut, therefore a rate hike. So they're really in the middle with the whole. And then Friday we saw a big, not really a big drop in retail. Well, yeah, it was pretty big. A big drop in retail sales. Now, a lot of people think when retail sales decline, then that's disinflation, which that is not always true. There are certain situations where inflation is going so high that consumers are pressured that they just don't want to spend. So they're tight. But if you look at the debt is increasing in America from the consumer. So it means that people are still taking out debt to keep up with the cost of inflation. So Always remember that. Just think about it like Nigeria, right? If you look at Nigeria as a whole, everybody don't have money, the economy looks bad, but inflation is still going up. Inflation can go up because of multiple reasons, but in this situation, in America is going up because of supply shock, not demand. Usually people just think demand equals inflation. No, demand can slow and inflation can continue to go because of supply shock. If energy prices pick up and businesses have to raise their prices to kind of meet the energy shock, the supply shock, then the consumers are going to be affected heavily, especially if wages aren't keeping up with the inflation. And in America right now, wages are falling behind inflation. And also in Japan, that was their biggest concern too. They were like, well, wages, they're not going to freeze, they're not going to slow down. Wages in Japan was going up. That's why the Bank of Japan were so hawkish, like, okay, we can hike rates because wages are going up and inflation is going up. But that's not happening anymore. Same thing in America. And then we also saw Michigan consumer sentiment fall because of inflation. So consumers are definitely getting tight on their spending. And like I said, I'm not, how do I say this? I'm not like this super hawkish bull on rate hikes, but don't let it be a surprise if the narrative pick back up, if the pricing and rate hikes pick back up, and even if they hike rates by 50 basis points, that's not a surprise to me, essentially. So that was last week. Nothing too crazy. Let's look at the our daily market conditions. Now, the daily market conditions brief is going to come from Friday, what we kind of just talked about, because the markets haven't really opened yet. So the macro backdrop indicates a focus on equity markets performance alongside with evolving economic data and geopolitical developments. U.S. equities are seeing increased inflows and hovering near record levels, even as concerning regarding earnings and oil risk persist. Broader market themes includes AI-related stock performance and ongoing regional conflict. So right now, equities are still holding their weight due to the earnings that's coming out. But listen, retail are the ones that's loading up in these record levels. Big institutions are selling because that's what you do when prices go up, and you take your profits. And that's another thing. I don't think the spending in America is really that slow, because when stocks are high, that means people have more cash to spend. So just keep that in mind. If you want access to our Minty dashboard where you can have access to our different tools, make sure you join our VIP community so you can get access to this, our all access pass. So looking on our wire feed, so this week we have, will the Fed's minutes reveal any forward guidance? Because we all know that the Feds have been saying they're not going to provide any forward guidance. So we probably get that same thing this week. We have that event with the chair this week. So I'll talk about that when we get into the charts. But really nothing too crazy. Trump is still declaring he has control of the Strait of Hormuz, which isn't true. Iran says that that's a lie. And I did see an article. I didn't read too much into it over this weekend, but I'm going to take a look at it this week, that Oman and Iran has come to an agreement. But Iran also said that they are preparing for military action against the U.S. They're like picking back up for it. So won't be surprised if that drama continue to go. But regardless of that war, if the war ends, if it continues to go, oil prices are still going to stay elevated. That's the outlook for oil. So that's what we have now. Nothing else too crazy in these markets. Now, before I hop into the technicals, I just want to shout out to my Discord community. If you're not in our Discord, guys, please tap in. We are killing it. Just want to share some of the success of some of our traders, looking at the opportunities we got last week. Gold, shout out to Frankie. Nice, beautiful opportunities he caught on gold. Gold definitely rallied but not much. It's still in a downtrend. We're gonna talk about that. If you look at my last weekly outlook, I pretty much said we are finally in that sell zone. We broke a little bit above the sell zone, which gave you a better opportunity. No crazy risk, simple risk, slowly catch a big move. Then who else we got here? Frederick, beautiful USD. JPY short opportunities he took on Euro JPY. I mean, he's pretty much bought in that intervention low. He bought again on another pullback, easily ranking up profits. And then he's also in NZD-JPY. He's literally killing it, guys. CAD-JPY. Whoo, this is beautiful. CAD-JPY, GBP-JPY. And listen, all of these are the trades that we've been calling out in our community. Oil, I've been analyzing that for a while. We started buying oil back when it failed. The first drop, when it filled that gap down at 70, 68, 69, those were the best opportunities, to be honest. But anything really below 75 is great. He also got into that as well. I don't know, it's not showing. Here we go. Whew, right there, he got in at 67. That is so beautiful. So yeah, pretty much solid. Community is killing it. If you aren't on our trading floor, this is probably the best trading floor in the trading community right now, in the trading space. So make sure you guys tap in. I'll drop the link to join this in the caption. So yeah, tap into that. Let's go over here to our Profit Flex channel. Now, our Profit Flex channel is free for you to see other traders. So, oh yeah, this Japanese stock market has been a killer trade. I'm currently up like $30,000 on this play. Shout out to our moderator Franksky for dropping that. Here are some more. Ooh, y'all, this is just beautiful. Nicely risked. No crazy lot size. Another trader in our community. Let's see if I can make this bigger. Trades running. Euro NZD buy. Beautiful. Following the trend. Euro USD. Nice short. We did get some nice opportunities on Euro USD last week too, on that CPI push up. Snipers on AUD USD. These are my trades from last week. If you watch my daily live streams, then we talked about these opportunities. So solid work. Here are my trades on the Japanese stock market. Now, this was actually on, I'm going to drop them in there now so y'all can see it. Let me see where we sitting at right now. The Japanese stock market is going crazy. You know, when the currency falls, stock markets go up. And the rate cuts, they're not really coming. So this is currently where I'm sitting at on my Japanese equity longs. That was one of the easiest trades that you could have like taken. Here we go. So I just dropped that bad boy in there. Booyah. So I'm currently up nasty on that going into this week. We'll see how it plays out. I'm expecting that to break all-time highs, get to about 75K. Probably still start closing some positions. So yeah, that's how we doing it. All right, now that's enough of that. Let's hop into these charts to see where we're at, starting with DXY. Let's see here. All right, so I want to kind of go back to where we left off. Ooh, I didn't know DXY felt like this. Oh, no, I'm on the 1 hour. All right, so here we go. Back on the 4 hour. So DXY just consolidated between the 61.8, 78.6. Back down in that buy zone. Like I said, nothing crazy. We can push down a little bit lower in this buy zone. You can get some opportunities. But going into this week here in the Fed's talk, we probably just get this same narrative and probably just consolidate back up to here and probably do something like that. Or that could be a nice triple bottom and we can finally break above 100 going into this week. So we'll be keeping our eyes on that, but nothing really has happened with DXY. A lot of people saying DXY collapsed. It just consolidated. That's literally it. Nothing crazy. I actually think this is a nice buy-in opportunity because we're in a buy zone. JXY coming from our last weekly outlook. I mean, played out 100%. Got a net sales zone. Now we're breaking down below the 61.8. So yeah, too easy. Nothing crazy. Momentum still probably go to the downside, but don't be surprised and try and chase that late and then push back up and consolidate also. Or we can just continue to fall low. Once we break this 100-day moving average right here, then it's all she wrote. We're going to probably close that gap soon. But don't want to get ahead of ourselves. Let's just wait to see how price react to the 61.8 when market open and the 50% fib level. Euro USD is why I said we push back up. I'm still expecting this to go to the downside. Nice short going into open, back in the sell zone. So right now price is just consolidating, nothing crazy. If you need opportunities, this is a solid opportunity with the dollar sitting low and this sitting high. The divergence is there. So back in the sell zone, got my sales up here last week. Probably expect this bad boy to fall back down. We held the 61.8 and it bounced, so nothing crazy. And that was caused by CPI, retail sales, all of that negative data, but didn't break our thesis, still pretty much going. USD JPY still pretty flat. Hasn't done anything. Like I said, even with that high impact news last week, the market barely flinched. Like nothing happened. Still in longs. Looking like we're going to break 160 this week. If we do, then we're here we go. If we break 160, then we're back above the 100-day moving average. So the bulls are back in control. I'm still expecting this bad boy to push back up to where they intervene into the markets. I don't really see them intervening again. The cost of just doing interventions over and over, it doesn't make sense, especially for Japan. And yields are still high in America. Like the what's the guy named Scott said, he is going to try to keep yields down, but I highly doubt he's going to be able to do that. NASDAQ still in the same area, nothing crazy. Like I said, if we can get up to a new all-time high here, I would definitely short it again. I'm in a short over here at the around 30K, right? Like 30,600. So this is my short is like over here in this zone. So I caught that big move, took a profits on one of the positions, still holding another one. I got in another position at the 50% fib level, but risk is managed. But I really wanted to get up here in this zone. So keep your eye out on that. If not, if you watch my last video, always remember you can every price in the market is an opportunity depending on the risk associated with it. You don't have to be greedy. So many markets you can go into. And then we have Japanese. Ooh, this one is just beautiful. Risk framework. Our technical framework playing out 100%. Talked about this on our weekly outlook. I'm expecting that bad boy to rally back up to 73. Looking to take my profits right around 75. If we get to a point to where wages start to pick up or the pressure of the Bank of Japan, then I will look at opportunities to start shorting. But my key indicator is really the dollar behavior, to be honest. So still expecting this bad boy to run to the upside. I mean, it's too late for you to try and chase this rally. You just missed it. You got to sit it out, put it on your watch list, look for the sale opportunities when we get there. But you can't long this right now. It's just too late. The risk to reward is not asymmetrical, and it just doesn't even make sense. And then we have Bitcoin. I mean, I told you guys on that last weekly outlook that is a nice short because we was right at that top Bollinger. I said we could go up to 70. That's the sell zone. I wouldn't be surprised if we do consolidate in Bitcoin and push back up here. Even if we push all the way back up, you know how Bitcoin reacts. It's a high volatility asset. So no surprise if we can get back up to 100K. But you can't sell this right now. I told you guys in the last video, you cannot sell into support like this. Yes, it can break down lower, but the risk is to the upside. So the highest it can go is back up to above 70K. So again, this is another one where you have to sit on your hands. The fundamentals don't support buying it up to 70K because it's not a good. There's really no good place to set your stop. To be honest, even if you was to, let me just show you. If you was to long this from here, let me get my fib, go from the high, low to the high. Just the framework, guys. Just the framework. Boom. That's the resistance there. Booyah. So your stop will have to be, if you buy this, your stop, I will say, has to be under 58K. I just don't think that's a great setup. Let's got the risk to reward. It's about a 1 to 2.5. Listen, the macro don't support it, so I won't try and take that risk. I'll just wait if it happens. If the market gives us that rally, I definitely will be looking to short it. And then gold, everybody's best friend. Same thing. Gold is overvalued. It's right in our sell zone area. That's why Fransky sold it from our Discord, one of our moderators. And yeah, the best opportunities that I told you guys on my live stream were right in this zone. If I put it over, booyah. Nice sell out on gold. Held the 78.6 to the downside. Rallied, just consolidating really in between here. If we break there, we probably consolidate there and then just continue to go lower and then we go lower. That's essentially how I see gold playing out. I really don't see any crazy pressure for gold to continue to go higher in these markets. Now, even if you look at gold on a monthly, gold is still down 22% from its all-time high, from its peak. It is holding on to that Bollinger. That's why that 40K is that support, because it's kind of trading above it. But look, y'all. Oops, I'm sorry. Once it break that Bollinger, you see what usually happens? So, listen, I won't buy that high. It just, honestly, it doesn't make sense. That's not a strong support. To be quite honest, for my swing traders, the next strongest support is at 34 and then 27. So we have some solid key levels that we can fall to. So yeah, even if you try to buy it from here, your stop has to be below this previous structure on the monthly, which is right here, where we had some sort of support. And we still haven't retested it. And if you've been following me for a while, I don't like to really trade commodities on small time frames. I like to zoom out to get a clear picture of what they're doing. So, and then the fundamentals solely don't support it. If we get calm in the Middle East, then gold prices can really take a hit, even if it picks up. If the yields follow to the upside, then gold is not attractive. The dollar is, because gold pays no interest. So yeah, that's that bad boy. And then U.S. oil, let's take a look at that. That bad boy is still running. I don't like to trade oil on small time frames neither. I got in this bad boy here. So right now, this was a beautiful sniper. This is that gap I was telling you guys about earlier at the 67 that we got in our community. So we're sitting in some nice profits right now. If this keeps going, then we'll just continue to rally. Yeah, that's pretty much it. If we go to the 4 hour, it's really too late to try to. I don't want to. Yeah, it's too late to buy it. We're above the 100-day moving average on the 4 hour. Even on the daily, let's see. Are we? Nah. Daily, it looks cleaner. But based on my entry down here, I don't think. Like, look at it. Let me just show you. Look at it. You see what your wrist looks like? So it's like, it's not bad, but it's not good. If that makes sense. I feel like your USD has the better opportunity right now. Your USD here. Ooh, on the daily, that looks so nice for a short. Literally snagging the 100-day moving average. Rejecting it. And I think that's the best. That's all I got for this weekly outlook. If you want more opportunities or you want to see more markets that I analyze, make sure you join our VIP trading floor, our all access pass. Like I said, I'll tag the link to join that in the comments. that is where I stream Monday through Thursday at New York close, so it can prepare you for the next day. And I go into multiple markets where you can spot more opportunities. So let me know what you guys think about this video in the comments. Like I said, it's nothing crazy happening this week. Y'all didn't even go through the economic calendar. Don't kill me. Let's hop back over here really quick for the week. Can't let y'all go out like that. So this week we have Fed Hammock. No, that's, see, is that this week? Oh no, I'm sorry. Gotta go to next week. Okay, here we go. So this week we have some data coming out of China, retail sales. So are they expecting retail sales to pick up? Could happen. Inflation data in Canada. We have, really for the dollar is what I'm really concerned about. Let's see. We have pending home sales, nothing too crazy. We have the Fed's minutes out on Wednesday, and then we have that speak from the Fed. It's not on our economic calendar. Let's see if it's on Forex Factory. I think I know there's an event this week from the Fed. Jackson Hole, that's what it is, but it's not coming up on the economic calendar. That's weird. That's a big. Make sure y'all. I think it's called Jackson Hole. Yeah, it's on. Oh, disregard. It's on the 27th. I'm sorry. I don't know why I thought it was this week. So we really don't have anything this week as far as economic data. So gonna probably be a slow week. Probably market just reacting to what happened last week, or if there's some Middle Eastern tension coming up. But yeah, let me know what you guys think about this video in the comments. Hopefully you didn't get liquidated last week because the market did not move. And yeah, let me know what your feedback is. Don't forget, if you're not subscribed, subscribe to the channel. Join our Discord if you're not on our Discord, and ask questions. A dumb question is a question not asked. So that's all I got for you guys today, and we'll be back here next Sunday for our next weekly outlook.